Good morning, traders and investors around the world, and welcome to Monday morning's edition of premarketinfo.com, where we prepare you for the most important hour of the day, the first hour. Well, Dennis, we've almost mirrored Friday's intraday range here with the range we have so far this morning. Right now, unchanged in the S&Ps. We can't seem to get out of this area.
Yeah, Joel, just been a quiet day. Obviously, we've got that one little merger in the pharmaceutical area, which is popping up your hepatitis C drug companies, but we'll talk about those in the market movers. But other than that, it's been a pretty quiet morning here again, Joel.
Okay. Starting with the S&Ps, the current high stands at 1277.75, bumping up against Friday's intraday high, and also you have the weekly high up there at 1282 and a quarter. If that 1277.75 stands as a high of the day, we have a downside target at 1259.25. Globex low currently stands at 1267.25. That is smack dab right in between Friday's Globex low as well as Friday's intraday low. Mid-range currently stands at 1272 and a quarter, right around the just below the unchanged. So still trading in this 1272, 1273, and 1274 area, just looking for some direction. Moving on to the Big Ten, starting with Apple Computer. Very strong week last week for Apple Computer. Quickly approaching its all-time high here of 426.70. That's really the only number I can give you on the upside, folks, because that's the only number that's there. On the downside, let's use 422.75. That's Friday's highest support, as well as 422.40. Below that, let's look for Friday's low at 419.22.
Well, Joel, is today the day that Apple makes a new all-time high? We've been talking about this for seems like the last month, or at least the last couple of weeks. We keep saying how Apple's drifting up towards that high. You gotta think it's only $2 away from there now. It's probably gonna test it, and I wouldn't be surprised if it does take it out even today. So keep that number in mind, 426.70. It could be that shakeout though, where a stock makes a new high, people buy it for the breakout, and then, it ends up going down 3 or 4 points just to shake out those people who are buying it for the breakout. So don't be fooled by the fake breakout play here, because that does happen quite a bit. But do be aware that that's the big number to play it off of.
So you're recommending that 426.70 as a place to exit some longs, folks. That's all we can give you on that one. Well, going from a stock that was very strong last week to one that wasn't so strong. ExxonMobil, folks, really running into problems here at 86, Dennis. Friday's high right there at 86. Wednesday's high, 86.15. Just getting a lot of congestion there. Interestingly, the stock settled 20 cents off its low of the week here, 84.92 low, with an 84.12 close. So, ExxonMobil not joining in on the rally here. Of course, that did rally, quite a bit previously. But still that 86 level is going to be huge on the upside. You break below this 84.92, do see some mild support at 84.57, but we could be heading back down to that $84 level.
Consolidating here, Joel. Last couple of days, it's almost been the same range as 85 areas support, the 86 areas resistance. But you're right, we start taking out that 84.92 low from the other day. Start trading like 84.80, 84.75. Then it starts to open up to the downside. So I don't know if I would really want to try it off this support again. It's worked for a couple of days. Third time's a charm, I often say. This will be the third time testing this 85 area. So you want to be careful. This market starts to go south. I think ExxonMobil will be one of the first stocks to fall with it. So I'd be a seller in the high 85s, but I would not be a buyer in the low 85s today. That's the change in the story at ExxonMobil from Friday.
The mantra. Okay. IBM, similar to ExxonMobil, closed just 22 cents off its low for the week, settling at 182.54. 182.32 low, just hovering above that weekly low. I see a $1.30 drop there to the 10-day low at 181, and then opens up all the way down to the 179.04 level. Coming back on the upside, we're still $2 away from major resistance, which was Friday's high, 184.48. But I would check, if you're trading that IBM this morning, I'd like to see if this thing could at least hold unchanged before dipping my toe in the water on the long side.
Yeah, I don't know if I'd want to even be on the long side, Joel. This stock, you've got Google Google hasn't been doing as great the last couple of days, but Apple making new highs. A lot of your tech stocks have been pretty strong. Microsoft we've talked about. IBM has not participated whatsoever. For whatever reason, the relative strength on this stock compared to the other tech stocks is very poor. So that is an indication that usually, rallies need to be sold in something like this. This 185 area, you look at Friday's high at 184.48. If for whatever reason we were to get up, a couple bucks on the day, I think you'll find some good resistance up there. I think you'll find some psychological support down the 180 area, but really there's just not much in there before 180, Joel.
Yeah, because all the people that are crazy are going to be buying that stock at 180.
Well, I don't know. I won't be buying the stock. I just don't like the relative strength on it. So it's kind of like a towel. Trading's like poker. You need to look and read for the tells. And when the market's rallying and tech sectors are rallying and your stock is not participating, that's telling you there's something else going on there. And that's why, I think this stock, is, a little bit relatively weak, so it needs to be sold or possibly needs to be sold into rallies.
Okay, on the other side of the coin, Microsoft here, trying to get up to the February highs of last year, which was 28.34, made a weekly high at 28.19 with the close at 28.10. Since breaking out of that 26.50 area, we've rallied, blew through the 27.5, Dennis. This stock is just showing a lot of strength, no news related to it. Still got to be a buyer here. Once we break below the close, 28.15, or 28.10, I wouldn't exactly be in love with it. But let's see what happens at Friday's high here, which is 28.19. You know how Microsoft does it. We'll hit an area 1, 2, 3, 4, 5, 6, 7, 8 times before it busts through. So let's see if that wall is forming there at 28.19. And good support coming down to Friday's low, which was 27.52.
What was that high back in July, Joel? I'm looking at the chart there. It was just above 28 it topped out. Can you get the exact number there on what that high was in July? You see that there where I'm looking?
Yeah, I think it was, is that above the 27.71 was a level I remember going back, but I'm
looking at 28. There was a high back there just when it took out 28 in late July. I'm just looking at that. So it did break through this. I think we're trading above there, though. It looks like it's higher than 28.19. I don't have the exact number on that high, but I'm just looking at the chart, the 6-month chart back there, just breaking above 28. Anyways, if you do find that out, you can mention
28.07. 28.07.
There you go. That's the number I'm looking for, Joel. 28.07. So we're above that now, 28.19. I think, if the stock can hold 28, it continues in rally mode. But if it does start to break down, we've had a pretty good move here from 26 to 28. That's a big move for Microsoft. So don't be surprised if it does have a pullback day in here. I still think, you don't want to be shorting the stock. $29 is probably maybe where it wants to go, but that's, probably going to take a couple of days. Keep an eye on Apple. Apple is one that, definitely leads Microsoft. Apple starts making new highs. That'll probably prop Microsoft up as well.
Okay, Chevron Corporation, similar situation to the Exxon Mobil, weekly low at 107.97, with a close at 108.31. Below this 108 level, Dennis, this stock just doesn't have much in there, perhaps down to 106.18, which was the 6-day low. Coming back on the upside, trading right at the close here, so you can use that as a swing number. Really no major resistance up to the double top you have at 109.54 and 109.61, which was Thursday and Friday's highs.
This stock looks tired here as well, Joel. We were talking about ExxonMobil a few minutes ago. Chevron obviously moves very closely with ExxonMobil. Commodity stocks overall have had a pretty decent run here over the last month. They're starting to look tired, so I wouldn't be surprised, if we do start to see a breakdown in some of these stocks. The major resistance up there at 110.99, we talked about that 111 area, and the high frequency guys being in the high 110s. If we were to get up to there, that's still a sell. But I don't know, the stock looks tired here too, Joel. I wouldn't want to own it.
Okay, talking about tired stocks, J&J, after running into the Great Wall of China in that $66 area, here we are trading 64.83 close. Here's another stock that closed 22 cents off its Friday and weekly low, 64.61. Next stop after that level, 64.01, which was the 12-day low. Coming back on the upside, you really don't have any good resistance until you get up to Thursday's close, Friday high area, which is in the 65.40 area.
Yeah, I agree, Joel. I think, you gotta wait for a rally to sell this one because, it's hard. If you're leading on that 66 area and you're down here, selling 64.83, $1.20 is a big move for Johnson & Johnson. So there's a lot of risk there. I would definitely not be a seller. I'd tell God into those mid 65 area, maybe use that Friday high 65.46 as a resistance area. But then you start getting in the upper 65s and there's resistance all over the place. So I'd love to see a rally on this about $1, and then you get another chance to sell it up there.
Okay, Procter & Gamble, another defensive stock, still hasn't backed off as much as the J&J has. It's run into big sellers all the way up here to 67, but really not relenting. 65.93, another stock that made its weekly low on Friday. That's going to be very good support. Coming back on the upside, Dennis, it just gets tough from 66.80 to 67. I mean, if you're long and you're going into that area, you just gotta have offers up all the way. A breakout of 67 will make it a different story, but stock getting thick up here, Dennis.
I mean, you're right on the money on this one, Joel. The 66.80 to 67 area is thick. I'm a seller up if it gets up to that area 40 cents higher from where it is now. It does break out through 67, and you're right, all bets are off. I definitely, if I was short, I'd be covering if it broke out through that 67.
AT&T, I was looking at this stock, Dennis, and it's I guess we're going to have to do a little more homework to see how this stock trades pre-dividend. Had a nice rally into the dividend, and since it's had that dividend, it really is run into problems. I guess that's the only way you can get this thing to go down, more than $1 in a couple of days is if you take a 30 or 40 cent dividend out of it. But here's another stock closed right off the weekly low, which was 29.60. The close 29.68. Really, if you're shorting in this area, there's really nothing to lean on up till Friday's high at 30.09, and quite a bit of risk there. Below that Friday weekly low at 29.60, you have your low from December 22nd, 29.30. I think if this stock is for real on the upside here, you get a couple bounces perhaps off this 29.60 level, little consolidation, and then go back up and test that 30.50 area.
I think you make a good point here, Joel. It's just the fact that there have a lot of people doing this dividend capture type of stuff where they'll buy the stock, before the dividend, take advantage of maybe a little run up into the dividend, and then obviously they're selling it when it goes ex-dividend. That's exactly what's happened here. Stock went ex-dividend late last week, sold off, ever since then, obviously having a bad day Friday, being down 30 more cents. So I think that's what it is. People get disinterested when they don't have another dividend for another 3 months. So, but that being said, 29.5 was old resistance. That could give you some technical support.
Okay, GE, that stock can't go down when they have Jackie Walsh on CNBC in the morning. Got a good formation for you for General Electric. You had 3 consecutive lows, 18.23 to 18.29 from Tuesday, Wednesday, and Thursday. Before they get to that level, they're going to have to get through 18.56, which was Friday's low. Tight range in that 23 cent range with 18.79 being the weekly high, Friday and weekly high. Above that, I'm sure it's not going to get there real quickly, but 1904 to 1914 will take us back and revisit the highs back from July 25th and July 26th.
Following my whole number theory, I'll just say $19 I think is where your major resistance should come in, and I expect high frequency resistance to be in the 1890s. So I'd be a seller in the 1890s on this one.
Okay, real quickly, Coca-Cola here, closed week on the week, 68.93, closed with the 68.62, low, find good support in that area. Coming back on the upside, Friday's high, 69.62 is minor support, but really running into problems here at $70.
High frequency resistance in the 69.90s.
Okay, we'll be back with the second portion of our show.